and going, oh my gosh, what's happening? Versus those who actually are riding the waves and know this is happening. People like Ray Dalio have been saying this for a long time. Like right now, the actual authors of these books have been actually out there telling people about this as well. I think this is a really, really big lesson for all of us to just really realize the information is out there, but you don't see this information on the media, right? So just know that where we're at on the video right now is exactly predicted as to where we are now, but it's only stage 3. There's 2 more stages to go, and they're all coming in the next couple of years. All right, Jason, let's give it a go.
Yes. And so what about stage 4? Stage 4 is the climax. It's the peak of the whole thing, just like when you have a wave, it rises, and then it crashes. From this trough and from these dangers, the makings of a new social contract and new civic order will arise. This battle could be peaceful or violent, involving public and private militias. Decisive events will occur, events so vast, powerful, and unique that they lie beyond today's wildest hypotheses. Armed confrontation usually occurs around the climax of the crisis. If there is confrontation, it's likely to lead to war. This could be any kind of war: class war, war against terrorists, or superpower war. And by the way, before I get to stage 5, I do want to make a point about all of the different things that are in those books and what I really resonate with as well. My whole life has been about following patterns and looking at time and how time moves. So the wealth dynamic system that we created was all about the cycles of time within a business, for example, or within an industry. The cycles that we use within the Chinese energies also goes through these 4 seasons. So the more that you see that in every one of these different steps that we're going through, there is an energy and a cycle which you can then tune into as well. Just like a surfer on the wave, then the sooner that you can be prepared for the next step and take the actions before we get there. How can we make sense of these different generations and different cycles? Strauss and Howe looked at each of the 4 different seasons and gave them a name. The very first one, which was the spring, they called the high. And the high was the time when a brand new beginning happened. In fact, after 2025, we're going to see a new high. We just got to get through the pain and the challenges that we have now to be able to get to that high, because there's enough that has to be broken down from the old before we can start the new. The second of the seasons, which is the summer, is the awakening. This is where everything then starts to take form and a new structure is then born. A new world order is created. And then from that second one, you then get to the unraveling, where things already start to go south, and then finally you get to the next crisis 100 years from now. At every one of these different stages, you also have got an entire generation that gets born. So at the very beginning of the high, after the Great Depression and World War II, we had the baby boomers. The baby boomers were the ones known as the prophets, the ones that were able to be visionary and see the future. After the baby boomers came Generation X. That's my generation. These are the nomads, the ones that actually then traveled out and spread the new system or the new world order around the world. And then during the unraveling, you then have the heroes, the ones who actually start poking holes in this whole new world order. These are the millennials of the last 20 years. And then finally, you have the crisis. Since 2005, you then have this whole new group that's actually been born, which doesn't even have a name yet. And these are the artists. This is where a new renaissance gets born, and where self-expression and creativity becomes the main driver of all the things we're going to be seeing around the world in the coming years. In coming months, I'm going to go through more detail on exactly what each of these different archetypes are meant to do, or how we are meant to protect ourselves and lead ourselves to an entirely new beginning. And this is all coming not just from the work of Strauss and Howe, but from all the work of those who are looking at the future and the new future which is coming our way. And that takes us to stage 5, because stage 5 is new beginnings. And this is what we can be expecting in the coming years as this crisis plays out. The economy will in time recover. Compared to today, it will be less globally dependent, with smaller cross-border trade and capital flows. And emerging in this crisis climax will be a great entropy reversal, that miracle of human history in which trust is reborn. In a moment of maximum danger, that seed will implant and a new social contract will take root. For a brief time, this American feminine will be malleable in ways that would stagger today's unraveling era mindset. The crisis climax will recede into the public memory, a heart-pounding memory to all who will recall it personally, a pivot point for those born in its aftermath, the stuff of myth and legend for later generations. What are 3 things you can do with all this information? Number 1, don't get caught up in the hysteria of the media. The more you have a sense of what's coming, the less you're going to be surprised or shocked when it actually happens. Number 2, expect things to get worse before they get better. So now is not the time to go like crazy, like celebrating about the fact that we suddenly have an end to the lockdown. This is a time to be cautious and to be ready for battening down the hatches for the winter that's coming. And the third thing is get ready for a new beginning. While it's not going to happen overnight, it is going to come in the next couple of years, and this is a moment in time which only happens once in a lifetime. As Mark Twain said, history doesn't repeat itself, but it often rhymes. The more in tune you are with the whole seasons of not just nature, but humanity itself, the more we actually can go out there and shape that humanity. I hope you've enjoyed this video. If you have, please click the like button, do subscribe so that we can keep in touch. And I'm looking forward to seeing you in the coming videos when we actually start sharing more of the detail of exactly what the next steps are we should all be taking. I'll leave a link below to the
Thank you so much, Jason. Thank you so much for jumping in. And so now everyone knows what the fourth turning is. And I think one of the most interesting things about this is that this climax, and like as I said, like in the climax, that's when there's war. Oh, by the way, if you go right back to when basically we talked about the spark, and when I was reading out, there's going to be a pandemic, there's going to be government lockdowns. That's actually written in the book, right? That book was like from the 1990s. It's mind blowing. So this climax is taking place right now. If you're watching the news in the last 24 hours, from when we finished yesterday to where we are today, a couple of things that have happened. Number one, the U.S. government has now put out something which is called the CHIPS Act, right? The CHIPS Act is about semiconductor chips, which basically is the new war on tech, where they have basically now banned China from being able to import chips, right? China's the importer of chips. They need it basically for their technology. And so they effectively have banned it. And you know how when U.S. basically banned Russia from using their U.S. dollar reserves, it basically forced Russia into a place now where Russia with BRICS is coming up a new reserve. And later on, when you look back, you go, well, actually, that was America that actually accelerated that. Well, something's now happening where, as a result of America now saying, hey, we're cutting off your chip supply, China has no choice but to look elsewhere for chips. Where are they going to look? Well, the second biggest producer in the world of chips, in fact, they produce all of the Apple chips for the iPhone, is Taiwan. And so in the same breath that basically the US says, hey, like you can't have the chips, you now have the US generals, which you can go and actually look online, you'll see it in the news, who are saying that they expect China to now accelerate their invasion of Taiwan, that they actually believe that that could happen by 2023, 2024. So on one hand, they go, okay, we're going to close the door so you have no option but to invade Taiwan. Then they say, oh, we think you're going to invade Taiwan. So there is this whole world taking place where we are just heading towards war in all these different ways. But it's almost like knowingly governments are doing this, right? I mean, they're actually taking actions to force different governments to actually go to war. So we're here in Singapore. We're right basically in the midst of the war theater while we're here as well. And we all just have to be very, very aware. This is all part of the climax. So this 2025, this is not just what I said yesterday when Ray Dalio says that we should see the end to the dollar. It's predicted within the fourth turning as well. But here's what's really interesting about this. If we actually go back for a moment to those different generations and where things are heading next, this is already happening. The fact that we have got this new generation, which is called the artist, this is actually taking place already, where when you look at what's happening with NFTs, when you look at what's happening with basically art and this whole new interest in not how do you mass produce something, but how do you personalize something? How do you, I was predicting this about 15, 20 years ago, saying, the top authors in the world, or the top designers in the world are not the ones that produce something that gets produced a million times. It's the people that produce one, but that one actually ends up costing millions, right? And we were actually seeing that happen already with the entire way that the younger generation actually are thinking very differently about what's of value, right? They'll actually, bid millions. In fact, the person who bought Beeple's like most expensive painting ever, or NFT ever, is based here in Singapore, right? That's Metacoven. So we have this incredible shift that's taking place right now. But as I said, like most of us on this call, we can look back in time and we can go, yeah. Like if you were born, right, but before 1960, you're a baby boomer, right? That means that you're a prophet, right? The prophets were the ones that created the new world order we have today. The Gen Xers, if you were born after the 1960s to 1980, that was the nomads. That was the ones who actually spread the message around the world. That's what I was doing as a Gen X. So I'm a nomad, which absolutely I am. And if you're in that category, this is your age group. By the way, why don't you just post in the chat, right? And here in the room, you can also turn to the person next to you and tell that person which one of these you are. Are you a prophet because you were born before 1960? Are you a nomad because you were born between 1960 and 1980? Are you millennial because you're born after 1980? And if you happen to be born basically after 2005, then you are actually a artist, right? And they don't even have a name for that yet. And so those people that were born at that point, who obviously are now teenagers, 15, 16, 17 years old, they are the ones that basically are now about to come up with an entirely new system of which we're all going to be a part as well. Super, super interesting times, but really worth thinking to what extent are you prepping and planning for what's coming, and not that it's all doom and gloom, because after every winter, there's always a spring. But if you knew that there's a spring coming in 1925, 1926, what would you now do differently to make sure you can weather your investment portfolio and your business over the next 2 to 3 years, so you are ready for this time as well? I'm just going to have a quick look at the chat to see where we are. All right, we can see we've got some boomers in here. Alan saying he's a boomer. We've got Preeton saying millennial. Oh, we've got a lot of millennials here as well. We've got some prophets. We've got a whole mix. This is fabulous. Oh, we even got some artists. Vera's here as an artist. So super good to have you here. Our future is in your hands. All right. Okay. So what are we doing about this? This is where it gets super interesting, right? Because we are living in a time which is a new renaissance. Remember, the last time this happened was 100 years ago. That was in the 1920s when we got the beginnings of Hollywood. So we got the beginnings of the music industry. Like everything which is our entertainment today got created back in the 1920s and the base of that, right? That's when Hollywood took off. So the same thing is happening right now with the ways that people are now actually interacting in something called Web3. We're going to talk a little bit more about that, and all the different investments taking place and where people are learning from. No one's learning about investments by going to a university, right? They're learning from it by coming to places like this, by listening to some of our speakers, by going onto YouTube. So let's go from this idea that we are actually in a very predictable period of time where we can actually already see, based on the waves, what's coming next. And hopefully that gives you some comfort that yes, things are going to get bad, but we got to find a way through this. And so from there, let's basically then take the next step and say, what does that then lead to in terms of the next one of the trends? By the way, a couple of things I want to share with everyone here. Like we said yesterday, one of the most important things is keep in contact with everyone who's sharing this information. This here is my YouTube channel where I am posting all of these different posts, and we are going to get very active. I've had to stop for a while because we're in a quiet period with our IPO where the SEC says you're not allowed to be talking about things. But that's over 6 months as of this week, so I can get back to doing it again. So I'm going to post my YouTube channel in here, and please do go ahead and subscribe. Just keep in contact. Even the interviews that we had yesterday and today, we're going to be putting up on the channel as well, right? So that way you can actually come back to these different things and share them with others as well. A couple of other things I wanted to share on here. This one here is my Twitter handle is just Roger Hamilton. You'll see that we're posting a lot all the way through this, like here I am from yesterday, right? So we're posting as we are going through all of these waves as well. So do follow me on here as well. We've got close to 1 million followers at the moment. So would love to have you as one of them as well. So I'm going to just post my Twitter on here. And then final thing that I will share, which is going to be part of this next wave actually, is my Facebook. Maybe one of the team can post it so I don't have to stop sharing again. But you can see here, this was us at the New York Stock Exchange in April when we actually had our IPO. It was actually April the 12th, so it's just gone by in terms of the 6-month anniversary of it. But what's super interesting about what we did was the timing of it, is that there was almost no other IPOs happening. And in fact, this whole year has been a drought of IPOs. But why did we do it? Because a huge part of our belief, and I hope you share in this belief as well, is that now is the time for us to be thinking differently about not just our investments, but also our businesses as well. So let me share with you, first of all, a slide that I just kind of skipped over yesterday, which is a super important slide. It's this one here. How do you change your investment criteria in the winter compared to when it's in the spring? So what you're seeing here is 8 investment criteria that generally are the biggest ones that most investors will look at. And you'll see that the blue ones are the ones that tend to be more of the focus in a bull market, and the red ones are more of a focus in a bear market. And so, as I said, we're in a K curve where some of the different industries are in a bull market. You might have heard Elon Musk say just in his earnings call yesterday and also on Twitter that he believes that Tesla is going to be worth as much as the 2 biggest companies in the world today, which is Saudi Aramco and also Apple. So basically, he believes it's going to be worth $4 trillion, and he says he has a path to how to get there. That's a very bullish number, given that right now they're less than 700 million. So that's a huge jump. But basically, when you're in a spring, Then term, which basically means how long do you want to keep something in an investment, stretches a lot. It's like, yeah, I'm happy to keep it in 5 years, 10 years, because I think it's going to be a good investment. Whereas when it's in a bear market, you actually want to be getting in and out of things faster. Cash ROI, people don't worry so much. This is cash return on investment. They're like, hey, that's not such an issue in a bull market. What you heard from a lot of our speakers is cash ROI is now the most important thing. Why? Because capital ROI, which is how much is your capital going to grow, you can always expect it to grow in a bull market. So who cares if you're getting cash? But if you don't know if it's going to grow or not, and maybe it's even going to halve in value, well, that doesn't matter if you're actually getting good cash return, right? So the big thing here is knowing that it actually shifts from capital ROI, which is good in a bull market, to cash ROI. And if you haven't made that decision and that change, now's a good time to do it. You're going to hear this from Simon later. The property investors in a bull market will be just thinking, can I buy something and sell it for higher later? No one's thinking that anymore, right? They don't think they're going to be able to sell higher for later. They're thinking, how do I buy below market rate and how do I make sure I'm getting good cash flow? You're going to be able to get much better cash yields when tenants are paying more for their property rental, and at the same time, properties are actually worth less, right? So think, well, what is my actual ROI I'm going to give? And we're going to give you some examples of portfolios and what they look like, because we actually have a competition with the winners coming on today from our challenge. Liquidity in a bear market needs to be much higher. Are you getting into things that you can get out of easily if you need to? Leverage, which is basically how much debt are you taking on? In a bull market, everyone gets leveraged up. In a bear market, you want to deleverage. You don't want to be taking on so much risk. Quantum is what's the size of the actual investments you're making. There's a lot more smaller investments. So if you want to raise $500,000, like a couple of years ago, you could have found one person who would give you $500,000. Today, you're much better off looking for 10 people giving you $50,000 each, because everyone's quantum has come down, right? And then risk itself, right? Obviously, people take a lot of risk in a bull market. In a bear market, they're looking at how they shift the risk to other people, which is really important for you to be thinking about as well. How do you insure against the risk? And non-financial returns is one of the biggest areas. So what do we mean by non-financial returns? It's not about what you're getting in terms of money. It's what you're getting in other areas. Like, am I getting good contacts? Am I getting good learning? So make sure that whatever you're investing in, including your own learning, is giving you basically a way to have an edge on the market, because those are the people that are going to make the most money. So we talked about yesterday, this is something which is a really important part, the difference of an asset plan where you're just kind of shooting at different assets versus a portfolio plan where you're thinking, I don't care if my entire portfolio goes down by 50% in the next year because of a crash. Am I going to be in a better place 5 years from now? And is it going to be sustainable, right? Because if you are thinking 5 years ahead, guaranteed you're going to be in a much, much, much stronger position to then be ready for the spring when the spring comes. Too many people are too obsessed with what's going on now and comparing it to where they were last year, instead of actually realizing, geez, everything is on sale right now. And so now's the time to actually start building up, just like Marcus was saying yesterday, and getting ready for where you want to be 5 years from now, right? So having a portfolio plan to say how big is your portfolio going to be 5 years from now? What can you be investing in now based on what you think is going to happen in 5 years is a much healthier way to go. And frankly, even starting from zero, you're in a better position than being in a position where you think you have something to lose. So this brings me on to the next element, which is the next trend, genius generation. So I want to just share with you the fact that we're preparing our company, which itself is now a public company, and we raised over $40 million this year through the public markets. We are focusing on where things are going to be 5 years from now. We know that our group, which is actually educating on things like financial literacy, investing, entrepreneurship, is going to have its high school diplomas, its degree programs that any different student can go through, right? If they want to learn from their top TikToker or their top YouTuber, they can do that, but they can actually get their high school degree at the same time. So really embracing what's happening out there. Know the size of your market. In the case of our market, it's a $10 trillion market, which is huge. And you can see here, half of it is the primary and secondary school market. That's why we went and acquired some of those companies. You know, you heard yesterday Brian talking about this, that he's out there buying. In good times, you make money by selling. In bad times, you make money by buying. And right now, there are so many good acquisitions that you can make. We just bought a university, which would have cost us a lot more money a couple of years ago. But again, because of the markets and where things are and our ability to be able to now scale it, it becomes something which we know we can get the money back very quickly after making that acquisition. And we already are now putting new degree programs in place to really support our mission of providing entrepreneurial education. So this idea of choosing a model which then is focusing at the artists, that's what we're doing. We're saying, look, there's this whole new beginning that's happening. let's get ready for it, because if it's a $10 trillion market, there's probably going to be at least one company worth $1 trillion, right? There's going to be multiple companies worth hundreds of billions. So let's make sure we're one of those. And let's set up a curriculum that actually helps everyone everywhere to learn. So I'm sharing with you how we're going about doing it, how I personally am going about doing this. And then the whole idea that if you actually can build a business model that's decentralized, because basically there is 5 different industries that are the 5 industries that you're going to see the biggest change in over this 10 years. You didn't have to be a rocket scientist in the 1990s to know the biggest industries that were going to be changed by the beginning of the internet. Was going to be number 1, media. Well, that happened. There's going to be number 2, retail. That also happened. There's going to be number 3, advertising and the way that we actually communicate with each other. That also happened. What's happening right now is there's 5 big industries, each one which is even more centralized than those ones are, and more government controlled, which are now decentralizing. The biggest of all of them is green tech, which is energy. And we're seeing this because governments themselves are using energy as a weapon right now. The second one is fintech. Fintech is basically what we're seeing with banks breaking down, including central banks. And then all the companies that are involved within fintech space. That totally changes everything. The third one is the opposite of green tech, which is the earth, which is space tech. We're seeing this happen at scale. And it's the reason that you have people like Elon Musk or Richard Branson or Jeff Bezos having space companies, because of the fact that they know that this is a multi-trillion-dollar industry. And then the next 2, one is the one we're in, which is EdTech, fully centralized, fully government controlled, but becoming decentralized and personalized. And the other one that's also government controlled, too expensive, not delivering what you need, but also decentralizing and personalizing is MedTech. And MedTech basically is the whole healthcare industry. Those 5, between them, is over $100 trillion in size. It's mind-blowing, right? And so these, in terms of the K-curve, when I talked about exponential technology companies, these are the ones within these 5 industries. And what we're doing is actually providing degree programs and certifications, working with the large companies, because frankly, for every student that's desperate to learn about these things, you've got companies desperate for that talent and needing those people as well, right? So invest in them. It's very interesting. I still remember it was probably only 10 years ago that people were worried, what happens when robots take all the jobs? Well, my kids, they're invested in the robot companies. Like if you invest in Tesla, or if you invest in Amazon today, you basically have got millions of robots working for you, right? And you actually even have Elon Musk working for you if you actually are an owner in the company. So don't be thinking you have to compete with the robots, right? You can own the robots. And then that way you can then basically be earning off your investments. And be thinking about that in terms of the fact that in the future, we are going to have more and more retail investors who are going to go, I don't actually have to work unless I'm doing because I love it, right? Because for self-expression. And that's one of the most important things is if you think that your job or your business is defined by paid production, you're going to lose against the robots because they're going to do it cheaper than you and better than you. But if you see your job or your business as not being paid production, but paid self-expression, no robot's ever going to be able to express themselves better than you can, right? So that basically means that you then have a chance of being not more of a robot, but more of a human, right? And that basically is where you need to be investing your money as well. So with that being said, let me just share a couple more things on here as well. And then I'm going to come back to Jason for a little bit of Q&A. What I also want to share on here is the fact that if we were to, let me just get my my slides back here. They've all gone off to the wrong side. This happened last time as well. They're in here somewhere. There they are. Okay. So let me just share my screen. And here we have got already, see here, it says 2025. Okay, this is winter. So we basically, up until 2020, said, okay, we're just going to educate entrepreneurs. This is the Elon Musk strategy. We want to transform the entire car industry. We'll start by going to people that want to afford roadsters, right? We'll start with the Tesla Roadster. Then we'll go for the mid-range car. Then we'll go for the mass market car. Well, so we're doing the same thing. We'll start with people that want to pay for their own education, which is entrepreneurs. Then we'll go to the schools, and we'll actually buy over the schools. Then we're ready to then launch in 2025, the new beginnings, an entirely new curriculum that everyone can be a part of, right? And with that, we have that opportunity for people then basically through acquisitions to build up our entire portfolio of companies. You're going to hear from Simon later. He runs Property Investors Network. That's one of the companies. We just bought his company for $19 million. This happened at the time of the IPO, and now we're launching his Property Investor Network all over the world with him. And then there's other companies here as well that we basically are now having as part of our group as well. And most importantly, we have our Metaversity, where we're actually setting up an augmented reality learning layer on the world where you can meet anyone, anywhere, and immediately be able to actually, with your AI genie, start to get an understanding of how you can actually grow your own personalized pathway going forward as well. So I'm so excited by where we are going, all right, as a structure. And what I will say for everyone on here as well, because like even during this time, we are so focused at cash flow positive growth. So this year will be like our guidance. We just had our investor meeting 2 days ago. Is like $35 to $38 million with positive EBITDA, which basically like is making sure that we're not going to negative cash flow. And we have been growing by 50% a year, right? So we're already saying, okay, by the end of next year, we wanted 4 million students by the end of this year. We already have exceeded that. We're going to aim to have like 6 million next year. We want to be growing by 50% each year. But if we keep doing that, by 2030, we'll have 100 million students. And so we'll be one of the biggest education companies in the world at that point. So I'm sharing all of this because like you need to have your own new beginnings plan, right? You need to already be saying, what am I doing not to just get through the winter? What am I doing to prepare using winter when everyone's actually stocking up? What am I doing to prepare by meeting the right people, by acquiring the right companies or acquiring the right assets to be ready for when things really take off? And don't be so worried about getting returns in the next couple of years in terms of asset growth. Think more in terms of cash flow. Like, are you going to be sustainable? The only people that aren't sustainable are the ones that run out of cash, right? It's not because your assets went down. It's because you ran out of cash. So just make sure you don't run out of cash. And this here, by the way, is something I want to share with you. This scan code, we have Tiger Brokers, which is the company that Jim Rogers invested heavily into. Tiger Brokers actually is giving, they're one of our sponsors here. And if you actually take a photo of this, they're giving you not only $88 into your account when you actually open your account, they're actually giving you, if you're here in Asia, you know, one of the biggest companies is called Grab. They're giving you a share in Grab. And they're also giving you 5 shares in Genius Group, in our company. So gifting it to you, basically, as one of our sponsors, right? And then basically, like if you are in America, you know of Robinhood, for example. They work very much like Robinhood as an app. This, by the way, is an offer for all of our attendees here in Singapore, but also all around the world. The only country where it's not actually available. And most of that country is asleep right now, but I know they're going to be waking up and watching the recording, is the US. US is always unique in what's allowed there. So it's actually a little bit different there, but you're not allowed to give away securities. So instead they're giving cash coupons and they're giving you like, you know, additional cash as you go forward as well, right? So best we can do there in the US, but really great to have companies like Tiger behind us in the things that we're doing as well, which is super exciting. So how do you actually decide on your own pathway going forward? What is it going to look like for you in terms of what you want to achieve? The most important idea in terms of your portfolio is, does it fit your ikigai? Which is, what do you love? What does the world need? What are you good at? And what can you be paid for? So the Japanese have this concept where they say, if you can intersect all 4, not just in your job, but actually in your investment portfolio, right? Then you're going to every day wake up and just see it grow. So what you love is your passions. What the world needs is your purpose. What you're good at is your talents or your genius. And what you can be paid for is your business model, or more importantly, your investment model. And I'm going to be going through examples of what this looks like going forward. But if you were to say at this point, okay, is my portfolio actually matching what I'm passionate about? What I think is important in the world? Is it matching what I'm actually good at? So I'm not having to spend time on spreadsheets if I don't like spreadsheets. But I have to spend time meeting people I don't like meeting people, right? And is it actually doing it in a way that's giving me what I think I'm getting paid my worth? That's the most important thing. And what I'm going to be doing in a section later on in this summit is giving away $50,000 worth of prizes to people that have actually put their entire investment portfolios together and also submitted them as part of our challenge. So we're actually going to get them on live, and they're going to find out who the winner is. So I'm super excited about that, so stay tuned. But with that, we have gone through 2 waves. One of the big waves is the wave around the 4th turning, and the other big wave is the wave around the fact that we have this entire genius generation coming. Those that were prepared for the millennials, they all have become super successful. There's no question that the likes of Apple and the likes of Facebook were all created for the millennials. Of course, we all started using it, but it's actually the companies now that are focusing at the arts. TikTok's a good example of that, which are the ones that are really taking off and have overtaken the likes of Facebook right now. So how are you thinking about the fact that we're getting into this renaissance yourself? And with that, I'm going to hand it back over to Jason for any immediate questions that you got.
Awesome. Well, Roger, thank you so much. Let's give a little love there for this first kickoff presentation. So thank you so much, Roger. In the chat, use it as well. And I want to make sure to remind everyone, if you have any questions, use the Q&A box. So you'll notice just at the bottom of the browser, there's a Q&A area. That's where you submit your specific questions. And a couple little other notices I want to give is don't put any phone numbers, don't put any emails, or don't put any links in the chat. The only people that you want to make sure is when you see that they're part of our Genius U team, they're going to give you the official links, and that's really where we want to make sure you have access to things like Tiger Broker for those who want to take advantage of this amazing offer. So with that, I've also noticed everybody has last name in their username. A little bug that happened, but don't worry about it. I can read between the line, but I might be missing out on your first letter of your last name. It's something. So Roger, I want to bring you back on because we do already have one question, and for everyone else that wants to ask a question, take your time now. I'll be looking at them right now. Alexander Borowski is asking about, all right, we're looking at these trends. What are your thoughts on the gaming industry as a place of investment? Is it something of interest? Is it something that Genius Group is looking into?
Yeah, really great question. And the answer to that is everything is getting gamified. Like if you just think about what is a game? You know, is investing a game? 100% is a game, right? All games, right, basically have two things that make them a game. The first one is that in order for it to be a game, it has to have rules, right? So does it have rules, and do you know what those rules are? Because if you don't, there's no way you can win the game. The second one is it's got to be fun, right? If it's not fun, you ain't going to do it. And if it is fun, you're going to do it. So most people hate school because school wasn't fun, right? But they will still go onto the internet and learn things because it's fun, right? The people who are looking at something like their investment portfolio and how they invest, and they think it's hard work and it's not fun, there's no way you're going to do it, which is why if you align it to your passions, your purpose, you go, you know what, I'm going to go look at what my Tesla stock is doing because I actually care about that company because of what it's doing for the planet. I'm going to go look at my Genius Group stock because I care about what they're doing for education. Right then, it's just a natural thing for you to do in a way that you wouldn't if it's like, oh, I got to go there and start trading again or freak out about the fact that the price has gone down. And so I think everything's getting gamified. I think that the idea of gaming as an industry will change, and it will be much more about gaming as a methodology, where basically like having things fun and making them gamified is something that we're all going to be doing naturally anyway. And the more we understand how to do that, the more we're going to engage people as well. Because guaranteed, if you've got a business or if you've got basically even a job where you're wondering why people are more attracted to what you're doing, the only reason is because they're getting attracted to someone else, right? Attention is the number one asset in the world today. And if you can't get people's attention because you're fun or engaging or using gamification tools to actually get people to get rewards by actually wanting to hear from you, they're going to just immediately lose their attention and go somewhere else. So this should all be taught at school, right? Like school should be a game.
Yeah, I like that. And I can think about how there's so many industries that are going in that field of education and making things more fun. I know in the way that we learn on their platforms as well, it's like you get rewards, there's all these incentives. So it's like more excitement makes us complete it. And then guess what? Positive externality, we actually get educated. So I love that. I wanted to bring up a question here, which is coming from Tallinn, Evelyn Karu. So even in the future, not everything will be going online or to tech. Is there any comments you would have on this? Like the balance of the sectors? Are there sectors that don't involve tech that are showing any kind of growth, or is that the only thing?
So if we were to go back 100 years, remember 100 years ago, most people didn't have a television in their room. In fact, most people didn't even have a car, right? And if someone was to say to you, every single company will be an electric company. Every company will be an electric company, meaning every company will use electricity, right? There'll be some people that no, it won't. I've got a farm. I don't use electricity. I still use candles, right? Like Edison was just getting going with the light bulb, you know? Like, so it's like what? No, every company's not going to be an electric company. What's happened with electricity is what's currently happening with technology, right? So every company will be a tech company, for sure, right? In fact, the top companies within 10 years will be run by AI. Like, it won't be run by people, right? Like, Singapore is mostly run by AIs today, right? Don't tell the politicians this, but it's true, right? I still remember here in Singapore, in fact, you guys will know this as well. If you go back just like 10 years, in Singapore, the gantry system, which basically is like, you know, controlling the traffic, right? Singapore almost has no traffic jams, because they basically charge you to come into the city center, right, at certain times. And to begin with, it was a box with a little lady in the box. You guys remember that? There's like a lady in the box, and she basically was like looking to see if you had the tag in your car which you paid for the day, right? The whole thing was so archaic. And she always got you. If you didn't have it, she'd always like fine you, right? And you get the thing in the post the next day. And one day she disappeared, right? All the boxes disappeared because there's these big gantries, and there was basically a control center with humans that were basically like in the control center seeing where the traffic was, and they were then deciding when to change the pricing on the gantries. And this would happen maybe like once every couple of months. Then what happened was they then computerized all of the actual gantries so that way they could just change on the hour. And eventually they even replaced the humans in the control tower so that they effectively were all just AI, right? So like the entire traffic system, the entire MRT system of Singapore is controlled by AI already, right? And we're just all happily going around with our overlords telling us what to do and how to do it, right? So I think we're all going to see all companies are going to be tech companies. This does not mean you go online, right? The idea of going onto a computer is 4.0. It's like, it's either real world or is this. No, in the future, you're not going to use this. I think most of us won't have mobile phones in 10 years' time. And you're thinking, what? No mobile phones in 10 years' time? If I told people in the 1990s you wouldn't have pagers in the future, right? People go, no, cool, we need the pager, right? If we didn't have a pager, how would we know when someone wants to give us a phone call? All the pagers disappeared. So in the same way, phones will disappear, right? And we'll be able to speak to anyone, anywhere, just through our glasses or through our clothes. And we won't even have laptops because we can go anywhere and just kind of click on a surface. This is all coming, right? Because we basically are in a very different world where everything is going to be sensor-based, and we will then enhance our real-world technology. What we're doing right now with education is to say, look, we should be able to learn anywhere, where if I'm here in Singapore, I can just put on my glasses and I can already be told who's the best person in the room for me to connect with based on where I'm at and what I'm trying to achieve. Who can I add most value to, right? And that just makes a huge difference straight away to our ability to enhance our own experience and actually know straight away also how we can make an even better experience for others around us as well.
I love that example. You talked about electricity, and that kind of put it in perspective for me. And I'm going to take a stab at one question that came in, and Roger, you can correct me if I did it right or wrong, but Deborah here is like, well, what about construction company? I'm almost thinking like, well, invoicing is happening through technology, and then, supplies are being delivered and tracked maybe with the crypto blockchain technology, so the source of all the material, and that's being displayed directly to the buyer. And then the way that buildings are being created might be using 3D printing, so there's a whole technology layer. So the technology is like prime.
Yeah, I mean, there's now 3D printed houses within a day, right? Like, so we're just seeing these massive shifts that are taking place where pretty much anything that's manual labor or anything that's a mechanical job that, frankly, a robot could do or a machine could do, all those jobs are going to disappear because no one wants to do those jobs anyway, right? So basically, again, the idea of my job being paid production, where I'm going to just like work until I'm 50 and then retire, that's all moving to paid self-expression. Because if someone could be working in construction every day to build a building, or that could just be happening automatically, and they're just getting dividends off that because they happen to be a shareholder in that construction company, and then they're spending their time going out there playing guitar or looking after their kid, or this, you're in Bali, and in Bali, like for a lot of people, you don't have, like the cost of living is so low, you don't have to work 9 to 5 every single day. So what do people do with the extra time? They do self-expression, right? They'll do something valuable to the community or something that actually brings them to a high level of fulfillment. And I think that's where this new beginning is going to take us to. And so everyone should be thinking about not, is my portfolio making me enough money, but is my portfolio giving me the lifestyle that I really want?
I love that. Roger, thank you again for kicking us off with such a powerful session. Now, you're involved in the next session as well, and I know there's a ton of people that are excited and have been connected with Jaspreet Singh and are super excited about the conversation that's coming up. And so I love that the trend, or I don't know if I love it or not, but it has a great title, which is the granddad of all crises. Can you tell us a bit more about what we're about to see? And we'll be ready to play our interview with Jaspreet Singh.
Yeah, for sure. I want to do one thing first because I am actually out on stage today, so it's a whole different experience. Is it better today? Better? Okay, I'm going to do this because everyone's here as well, and it's very difficult on a live session for this to hear any round of applause. But if you guys enjoyed the last session, could you give us a big round of applause?
What's too bad is because you have such a great noise canceling feedback system right now, we can't hear applause as much. As soon as it starts, the system cuts it out so that we don't get any feedback. But we heard it. We heard it. The beginning and then The system works well. Let's throw, if you know how to make an emoji on Zoom, put in the clap emoji like Leah just did. If not, just type in clap and maybe exclamation marks based on your level of enthusiasm, so we can do a digital clap as well.
That's fantastic. Okay, so this next session with if you go online onto YouTube and you look for Minority Mindset, Jaspreet has got 1.4 million subscribers on Minority Mindset. He is great at introducing himself. So he's been interviewing people like Robert Kiyosaki. He's interviewed, more recently, some of like the top people who have got really, really good like insights into the economy, like Ralph Orr, right? So really good like insight that he has. And the reason it's called the granddad of all crises is because I said to him that we have all these different crises right now in the world. Right, we have got the economic crisis, we've got the jobs crisis, we've got the inflation crisis, we've got the currency crisis, we've got the mental health crisis, we've got the we've got the actual health crisis, we've got the entire crisis of geopolitics. Like all of these different crises, like they all are interlinked, but which is the biggest one that actually is the domino that makes all the others fall over, right? So this is actually like, even though we cover a lot of other things as well, this is something you're going to hear from Jaspreet, and I think it's really magical, because it actually sums up a lot of the things we've been covering so far.
Awesome. So let's get started with this interview. And one more note I want to give for everyone. I saw in the chat that some of you might have had some issues with your Tiger account. So your Tiger Broker account, don't worry. After the break, I'm going to come back. I'll walk you guys through some steps, and we're working with their team to make sure they issue more coupons because they got expired, and we want to make sure you all get a chance to get some. So with that, let me go ahead and get us started with our conversation with Jaspreet. Let's get started.
All right, so we've got Jaspreet Singh here with me. Hey, Jaspreet, how are you?
Good. How are you? Thank you for having me.
Yeah, it's fantastic having you here. And I'm super interested in the fact that your YouTube channel, right? You got like 1.4 million subscribers. There are people watching you every single day because you're posting every day. And your whole brand around minority mindset, I'd love for you to share. What do you mean by that? And in these crazy times, how does someone take actions with a minority mindset today?
I love that. So the minority mindset has nothing to do with the way you look, your ethnicity, or your skin color. It's the mindset of thinking differently than the majority of people. Now, what does that have to do with anything going on right now? Well, we have an economic slowdown happening. We are arguably in a recession right now, although nobody has actually admitted that. But we have an economic slowdown, we have asset prices falling, and most people, when they hear the word recession, they get scared, they freak out, they panic, when in reality, recessions, asset crashes, all these things create more opportunity than ever. In fact, more millionaires are created during recessions than any other time. Why? Because you have people that think differently than the majority of people, and they use recessions and market crashes like Black Friday, but instead of buying the sweater at Macy's, you're buying a piece of the company. And so these types of economic events, these types of market slowdowns have happened in our history. I mean, if you look at the last century, we have seen a recession around every 10 years or so. And so even if you just look at our time frame from 2008 to 2020, that was the longest period of economic growth after the 2008 crash ever. And I'm not saying in the last 20 years, I mean ever. That was the longest period of growth. And so we are due for an economic slowdown. And then add to that the fact that we had all the money printing in 2020 and 2021, even into 2022, we had all the stimulus, we had all the interest rate cutting, which blew up some of our asset bubbles. And now that we're trying to fight the inflation, we're trying to prick the bubble that we created, it is going to create more opportunities, but it requires you to think a little bit different than the majority of people.
Right. Okay. So let's dive into this, right? Because I love the fact that you cover so many different areas of the economy and of what to do about it on your channel. So let's just talk about crisis and the whole idea of crisis being, both, like danger and opportunity. And if I was to list out a number of crises right now, I'd love for you to pick out of this which you think is the biggest one, and maybe even where there's like biggest danger, also biggest opportunity. So we've got geopolitical crisis, we've got energy crisis, we've got economy crisis, we've got inflation crisis, currency crisis, debt crisis. We've got the stock market crisis, real estate crisis. And then even beyond that, we've got global food crisis, health crisis, addiction crisis. Like, if you took all of those different crises that are happening at the moment, like, which do you think is the grandfather of all of them? That is the one people need to be looking at and realizing is going to have the biggest seismic shifts and then impact all the others along the way.
Well, they're all very concerning. And now, when you say what is the grandfather, well, ultimately, all the issues come down to money. What is money? The currency, and then the devaluation of the currency.
Right.
So, what does that mean? Well, wars have been fought on money. And our money in the United States, the dollar, is a fiat currency, meaning it's a piece of paper that's backed by the United States government that says that this paper has value. It costs 12 cents to print a $100 bill. And so this is good and bad depending on who you are and where the economic cycle you are. It's good in that when the United States is facing or has faced an economic slowdown, that our government can work with the Federal Reserve Bank to print more of this money, this currency, to stimulate the economy. That's what we saw happen in 2020. We saw it happen in 2008. We saw it happen in 2000 when the dot-com bubble bursted. We were able to stimulate and inflate the economy. Now, the thing is, there is a consequence and a cost to printing free money. What I like to say is the most expensive kind of money is free money. What is that cost? Well, it's inflation. And in the past number of decades, you had a lot of people saying that printing money or stimulus wouldn't cause inflation because it hasn't. But that's kind of like saying that heroin isn't bad for you because I've been doing low doses of heroin and it hasn't killed me. Well, just because you've done some heroin now and you haven't gone to the ER doesn't mean that if you keep increasing the dose that you won't. And so we've become addicted to this money printing, like the drug, and now we're paying the price for that. We printed so much money over the last, not just 2 years, but over the last number of decades. And now we're paying the price to inflation. And how do you fix this inflation? Well, you got to do the opposite of what created the inflation. You have to fight the inflation. And this is a painful thing to do. This is where now the Federal Reserve Bank has to either fight inflation and induce a recession, or stimulate and fight the recession but then make inflation worse. Like, it's facing this fork in the road, and neither of them are good things, but a inflation problem, like a currency crisis, like hyperinflation, is a much bigger problem. Now, we have the benefit here in the United States where the dollar is the world's reserve currency, so hyperinflation is a much less likely scenario. However, an inflation problem could mean that now other countries were holding on to dollars, because you have big countries around the world that use dollars as a safe haven, would say, oh no, the dollar isn't as safe of a haven as we thought. And then to start dumping the dollar, which could hurt the value of our bonds, create an even bigger bond crisis, and create even more problems for the United States. And so why does this now trickle down to all the other problems? Well, all these inflationary issues also helped spur business booms, because now it was very cheap and easy to access money. If you were a startup, you could access a lot of dollars because startups were able to borrow money essentially for free, or institutions were able to borrow money for free. Banks were able to borrow money for free, and they wanted to put this money somewhere. Where did they put it? Into startups. And you also had some institutions put this money into real estate. So, there's been a big debate over the last 12 to 18 months over what's causing inflation. You had some people saying that it's the supply chain issues that have caused inflation. And what I've been saying on my YouTube channel, Minority Mindset, is, well, the supply chain issues are actually a byproduct of the inflation. Because now, when you have all this money printing that happened, nobody was working in 2020, but you print all this money and give it to people. So now what happens? You got a couple $1,000s in your pocket. No one's making shirts. No one's making clothes. You go to the store and you buy all the clothes because you have money in your pocket. Well, now the store is going to not have anything to sell. So they're going to be forced to raise the price of the products and then call their manufacturer and say, hey, we need more shirts. We need more clothes. People are buying our stuff. Well, if the manufacturing plants are shut down because of the pandemic, now you have all these orders from stores who had nothing to sell. Now the manufacturing plants get backed up, and now they're going to have to start finding more employees. And now they start having to pay their employees more. And then they have to start producing the products and start shipping them quicker, which creates shipping backlogs. So all the supply chain issues that we're facing are a byproduct of the inflation. What caused the inflation? Well, the money printing and the stimulus. And so then you start getting to the geopolitical issues, which, many of them do stem to money. You have the European energy crisis. Well, a big part of that has to do with Russia turning off energy to the European countries. Why? Well, I can't say why. I don't know exactly why, but we could say it's a form of potentially economic warfare. To hold them hostage, potentially, right? I mean, there's a bunch of theories out there. Russia has claimed that they turned off the Nord Stream because of a potential leak, but I think a lot of European people are saying this is a way of economic warfare to potentially weaken countries. Why? Russia wants to assert their dominance.
Yeah, I want to come back to Russia because I'm in Singapore right now. I'm going to be heading back to Poland, which is where I was during the pandemic, and where my partner is, and I can tell you, like, what's going on in Europe is pretty crazy. I want to come back to Europe and Russia, and the fact that there is no question that we're going to be looking for outside forces and how they might be affecting us. Before we get onto that, I'm super interested in your thought around the inside forces, like self-inflicted, where we're our worst enemy. Because let's take the US government, right, and what the US government's right now, or even like the UK government, what happened quite recently as well. You had a video, which you did this week, actually, Ultimate Advice for Young People Who Want to Get Rich, where you talk about intention, right, and how we all have to be clear of other people's intention. If someone's selling to you, that they're not trying to rip you off, they're trying to make us out, right? So you're going to be aware of that intention, even if it's like an asset or a product of some sort that you can buy, like a house. However, in the case of governments, we're seeing not only must they have some intention where they might want to do something good, but there's also unintended consequences, right? Where they're like, well, I didn't know it was going to happen, or actually almost intended consequences, but where it's unavoidable. It's like, you know what, I'm not going to be in power as a president in 8 years' time, so yeah, maybe I print money now and maybe it doesn't matter later. Or, okay, I'm in the Fed now and I'll print money, but maybe later there's a different way forward. In your view, even without outside forces, you can look at people like Peter Schiff was talking about this. He was on your channel. There are people like Ray Dalio saying, just because of what US itself is doing with its own currency, it's self-inflicted to the extent that even if no one did anything, it's still going to implode if it keeps on printing money. Do you think, from your point of view, that the conspiracy theorists are more correct when they say, hey, there's almost a death wish, this is going to happen, and they'll end up paying, printing so much money that, in fact, their debt will go down? Or do you think that they really don't know what they're doing? What's your view from your side, given that you've looked at this so closely?
Well, sometimes you can be right, other times you can be early. And this is where just understanding the basics of history and economics. I mean, no civilization, no empire has lasted forever, and a common occurrence amongst a civilization collapsing has very commonly been the debasing of the currency. So if you go back to the Roman Empire, the ancient Roman Empire, they were a very powerful force. What caused them to collapse? Well, there was a number of reasons, but one of the reasons was the government wanted to really invest into their infrastructure and grow very quickly, so they started debasing their currency. Back then, their currency used to be silver coins. And then they started mixing the silver with cheaper metals. At first, it created a big boom in their economy because now people were able to do more stuff. But then people started to realize that this new debased silver with cheaper metals isn't as valuable as the pure silver. So people wanted more money. People wanted more money. And so inflation eventually caught up. And it was one of the reasons that led to the collapse of the Roman Empire. Ray Dalio talks about in our more recent history how we saw the Dutch Empire rise and fall, which led to the British Empire rise and fall. The Dutch Empire was on the guilder, the British Empire was the pound, and after the British Empire fell, that's when the dollar and the United States Empire rose. And the factors that have led to the civilizations falling was printing money, aka inflation, and then having more civil unrest within that empire.
Right.
And this creates a weakening of that empire, and then that creates opportunity for an external force to then attack and take over. And so, can the United States last forever? No. Can it be the top country in the world forever? No. Is it going to happen next week? Probably not. And so it's understanding that, the dollar will eventually lose a lot of value. But when is it going to happen? Is it going to happen next month or next week? Probably not. Is it going to happen in our lifetimes? Maybe. And there's a number of factors that are going to come together to cause that. And in historical terms, it happens. It's like 2020 is hindsight, right? It's easy to see it when you look back at it, but when you're seeing it happen, it's very slow motion. And so this is where now it is your duty as a person who wants to take care of themselves and their families and their communities to be aware of what's happening. That way you can take better care of yourself and your family and your community. That means using your money as a tool, not saving all of your money, owning assets, owning things that have real value. Because if you were to have all of your money in cash, and cash is losing value to inflation, then what? And this is where it's just being a little bit more financially educated and understanding how much cash to hold. When do you hold cash? Where do you keep the cash? Can you convert this cash into an asset that produces value? And it's thinking a little bit different as opposed to just thinking that everything is always going to be okay, but knowing that I'm going to protect myself against the worst, but hope for the best.
Yeah, absolutely. Let's go a little deeper into this. We picked the granddaddy of all the crises, which is the actual, fiat currency crisis itself. We know at some point it's going to happen, right? And most of us, we don't have a long enough memory to, even though I was born, I was telling my age now, I was born at the time when the pound just collapsed effectively and the US dollar took over. It's been 50 years since the US dollar went off the gold standard. And during that time, the oil crisis happened, just like we have an oil crisis today. And then when the oil crisis happened, we then saw the US dollar take over after America went to basically OPEC countries and said, hey, we'll give you all our protection provided that you use petrodollars. Now we're seeing a whole different shift taking place. So what I'd love to do is just share my view of where things are at and get you to add to that view what you see happening as well. And then get from that to say, all right, if this whole idea that this is not just something that's going to happen maybe 10, 20, 30 years in the future, but something that could be inevitable, what are the consequences of that, right? So what we can see at the moment for sure is that the BRICS countries have all come together, and most people aren't that aware that BRICS, which is obviously Brazil, Russia itself, and then you've got India, China, and Saudi Arabia, none of the BRICS countries have basically denounced Russia, for what they've done with Ukraine. I mean, all of them have in fact got together and they have accelerated their conversation around having a reserve currency. They're actually, meeting right now about that. You've got the OPEC countries, including Saudi, now coming into BRICS as well. And like we can see, Saudi is picking a fight with America quite openly at the moment. So we are already seeing things that the likes of Robert Kiyosaki, Ray Dalio saying, oh, these things will happen in the future, actually happening now, that it will be almost like, an economic war and a hot war at the same time, which will then make this shift happen. We're not, and Ray Dalio, even before all this happened, we're saying it probably is by 2025 that we're going to see this shift happen, which is only a couple of years away. So given that this thing could be, we're seeing it actually playing out in very blatant forms right now, exactly as you said, with Nord Stream and all of the other things that are happening. We're in for a horrible winter right now because of what's going to happen with energy. And if it isn't this winter, it may be next winter or the winter after, where the West has to capitulate. And we've already seen UK have to shift around and pivot as well. So all of this is happening right now in real time. It's like a slow motion car crash. I'd love you to add whatever you're seeing in addition to that. And then also, what the consequences are. What does this mean for the likes of cryptocurrencies? What does this mean for the likes of property prices? What does it mean for the likes of people in their jobs, based on you kind of projecting out the moment when we actually see this massive devaluation happen?
Absolutely. And I think you hit it right on the head with all the issues going on. And to add to what you said, you talk about the petrodollar. What that means is that oil is valued based on the dollar. Well, China has made a move to get oil valued not by the dollar, but by the yen, by their currency. And so all these things, have a very negative consequence to the dollar, as you said, the BRICS nations coming together to try to create their own reserve currency. All these things are in a move to devalue the dollar. If the dollar continues to get devalued, if people see the dollar not as the world's reserve currency, we don't have the ability to produce that much inflation anymore. The value of the dollar goes down. That really hurts bond prices. And you said, what does that mean for real estate? Well, there's two different kind of factors that you have to understand. One is the economic factor, one is the currency factor. The economic factor says home prices have gone up so much, and now interest rates have gone up significantly. I mean, mortgage rates are around 7% now, and at the beginning of 2022, they were sub 3%. So mortgage rates have gone up so much, and this is going to push home prices down relative to the dollar. Well, if the dollar starts to get devalued, then that would, in theory, push home prices up relative to the dollar. But home values have fallen. It's just that the currency that you're using to buy that property, you need more of that currency in order to buy that asset. And this is where, like you said, cryptocurrency has the potential to really grow in value. And that becomes a much more speculative play. Like, I invest in cryptocurrency. I believe in cryptocurrency, but for me, I know it is a risky asset. I also invest in physical gold. That is and has been your traditional inflationary hedge. Which one will be better? I don't know. I do think crypto has a lot of value. I really think that there's a lot of use case for crypto. I think there's a ton of use case for crypto, Bitcoin, the blockchain, because it is a very easy way to move money. It's a very simple way to transfer money. I use cryptocurrency and have used cryptocurrency to pay people overseas. And so the value that has is immense. So I don't see cryptocurrency going to zero, but again, it is riskier. But this is where people will probably want to move to an asset that has a more defined value for money. That's why the currency that the BRICS nations are trying to build supposedly will be backed by metals. One of the reasons why Russia has been working to acquire gold, even China. And so, again, these are all conspiracy theories right now, but you pay attention to what's going on, and this is where you want to become more financially educated, because if the conspiracy theory turns out to be partially true, well, you don't want to be the one that's then scrambling to figure things out to take care of yourself, but rather, if you are more prepared, worst case scenario, oh no, you have more assets. Oh no, you worked hard to put some extra cash aside, and you're just in a better situation financially, in the worst case scenario for you.
Right. Yeah. One of the main mantras that we're giving to our investor community at the moment is cash is trash, cash flow is king. Right. It's sort of like, at the moment, when we look at all the different things that can generate cash flow, and obviously even crypto's going that way with proof of stake, that you can now actually earn off your crypto. Businesses, if you have cash flow driven businesses, what's super interesting is seeing the number of YouTubers that are getting into cash flow driven businesses off their brands, like Mr. Beast and Beast Burgers. Like, if you actually have smart ways to be able to build cash flow, even acquiring companies that have cash flow, then that can be a good way to weather things. How has your investment thesis for your own investments shifted in the last couple of years, especially the last 12 months? And are you moving more into cash flow assets, or are you doing things a different way?
Sure. So I invest my money in 5 places: my own business and startups, real estate, stocks, crypto, and physical gold. I've been putting a lot more money into my own business, which up until now has been called Market Briefs. We're switching that over to just briefs.co. Briefs/Market Briefs is a newsletter company. So we have a free financial newsletter, and we're just launching our business newsletter for entrepreneurs and business owners and founders. And it's a free newsletter to keep people aware of what's happening for investors or for entrepreneurs. That way you can make better decisions with your money. So I have been allocating more money towards my own business, like what you say, a cash flow producing asset. However, I also see things changing. And what I mean by that is, our newsletter company is an advertiser paid business, meaning that we don't charge our readers anything. We have advertisements we charge sponsors a fee to have a placement within our newsletter. Now, my theory is come 2023, investment or advertising dollars will get hurt, if not go away. And why do I think that? Because when the 2008 crash happened, we saw businesses that were reliant solely on advertising get burned, just get completely wiped out. So for me, it's let me build up some cash reserves to take care of us if and when that slowdown happens, but then have the ability to invest heavily into advertising to grow the business then. Like I met with my tax advisor just recently. We were talking about, this is your tax bill. Why don't you do a big end of the year advertising campaign? And after talking to him, I was like, I don't think that businesses are going to be able to spend as much money in marketing next year. So I think advertising costs will fall in 2023. So I'd rather pay the tax bill this year, have that cash on hand as a cushion, but then also use that cash to take advantage of cheaper advertising costs come 2023. So kind of a little bit of a confusing answer, but my thesis is I think we can grow the business quicker if we see an economic downturn, if we are prepared.
And that's interesting because your business obviously is education, right? Like you're teaching people things and more importantly, self-education. People are there actually investing in themselves as well. I'd love for you to share your thoughts around education itself, plus other industries that you see really benefiting from the cycle as it is right now, because there are clearly industries like that. I think education is one of them. When people are in the downturn, they're like, hey, I got to re-educate myself because like my education in school wasn't strong enough. And actually on that, I think that your story is super interesting because like, your parents wanted you to be a doctor. My parents wanted to be an architect with the whole traditional education system, and then actually ended up getting out of it, but still being an educator, but in a very different way. How you see things growing in the education field and what you're doing compared to like the centralized education system out there.
Yeah, education is definitely a huge field. I kind of stumbled upon this industry by accident. I was supposed to be a doctor, like you said, but I was like a rebel in the sense that I would like try to be an entrepreneur on the side to try to invest my money. My parents were always like, don't do that, that's bad. So I was like running my businesses in secret when I was 17, 18, 19 years old. And yeah, it was a true story. And my parents actually didn't even know that I was running a business until I was, I think I was 21 or 22 when my business got featured on the news, the local news, and somebody saw me, called my parents and said, we saw your son on TV. They thought that I was going to jail. They were like, no, your son is running this business. So that's how secret I ran everything that I was doing. But I started teaching because I got screwed over a number of times. I got scammed. And that was for me, like, I want to make videos just to help people not get screwed over the way that I was. I didn't have any monetization plan. For me, it was just a hobby because I felt like I got screwed over and I was busy working on my other business at the time. Well, slowly, the Minority Mindset brand started to grow and I really enjoyed it. I mean, I love talking about this stuff. That's why I can make videos as often as I do because I really enjoy it. I mean, it's like almost 10 p.m. here in my office and we're still talking. I love doing this. So this is something I do for fun, but I was able to grow this and then turn my Minority Mindset brand to help grow some of my other financial businesses now. So I think education is going to be a growing industry, but it is very competitive because I mean, a lot of people are trying to do it. It's easy to start, but very difficult to scale. And I think that's where you have to be able to differentiate yourself and really provide value if you go down the education route. I think the digital media businesses are going to be a big piece of growth in the next decade because more and more people want to do business with a person rather than a corporation. And so with the growth of social media, people are going to want to see who's behind the businesses. Like bigger corporations are spending a tons of money to get influencers, not to sponsor them, but to have influencers be like a part of the organization. That way influencers can be a face of a brand. And so now if you're trying to build a business, every business is going to need some sort of media component. And that's where I think there's going to be a ton of growth in the media side, even if it's not education. So I think those two, the digital media and education, are going to be some of the biggest industries for growth in the next decade.
Yeah. And this is the most interesting thing. We are living in this world where there's so much fear because there are so many things that are happening at a macro level that are collapsing in ways we haven't seen for a long time. And then there's also brand new industries which are growing and decentralizing entire industries as well. So I'm interested in your thoughts on this because you're talking about education here, and we were talking about this before we even started this interview about what we're doing at Genius Group and how so much of this is about how do we make it? How do we bring education to where people really are, right? And we're already they're doing it for free, but they may not be getting a high school diploma or a degree program. And there's no question the future is that people can choose their own education. They can get it personalized. But there's, like, in the way I see it, like 5 different industries that are going to go the same way as the likes of the media industry or the advertising industry or the payments industry in the last decade, where it went from centralized to very decentralized. But we've got 5 which are way bigger than that. I mean, obviously, education is one of them because it's very government controlled in most countries. But you also have med tech as well as ed tech, which is the whole medical industry. You've got, and that's super overcharged in places like the US and other parts of the world. You've also got the whole green tech industry, which is why people like Elon Musk and Tesla are in that space. And that's the entire energy system, which we can see breaking down when governments can control it. And then you've also got the space tech industry, which is just getting started, but like used to be all controlled by governments and no longer is. But the one that I'm most interested to speak with you about, I mean, anything you have and your thoughts and whether you're investing in those areas, I'd love to hear. But the big one's fintech, right? Like, it's the actual finance industry itself, because we can all see that so much of what's going on in the world today is created by the banks and by the central banks. And whether or not blockchain and the way that we're moving forward can actually decentralize such that what we're complaining about today may not even exist in the same form 20 or 30 years from now. What are your thoughts on that?
Yeah, 100%. So to add upon one point about your decentralizing education, that's one of the reasons why I love YouTube, because when the pandemic hit, you had people, I mean, this is a true story, people were paying 40 to 60 grand a year for the college education that were watching it off of Zoom or a web meeting, and they were bored out of their minds from their teachers. So then they'd go onto YouTube and watch better lessons and learn more stuff for free. I think that's when people started to realize the value and power of decentralizing education. But on the topic of fintech, I'm a huge supporter of fintech. I'm a pretty big investor in fintech. And along with fintech, also legal tech. I'm also an investor there because, so I'm an attorney by trade. When my parents found out that I wasn't going to be a doctor, they were like, you have to at least become a lawyer. So I went to law school, but I never worked as an attorney. But what I learned, I mean, I love starting the business side of things. And as an attorney, there's a lot of fat in the legal industry. And so, like, if you wanted to go in your business and get good corporate business advice or good business advice, you're going to be paying somewhere between $500 to $1,000 an hour for an attorney fee. And it's a lot of money for you as a small business owner, and for the attorney, well, you're not getting all $500 to $1,000 per hour, because now you have to pay the equity partner, you got to pay the person who brought you in, you got to pay all the different people involved. And so the attorney's making a small little piece of that, and you are paying a ton of money, and all these other people are getting fat and rich from this old, outdated system. And that's one of the reasons, like, I'm an investor in a company called Up Counsel that's working to kind of decentralize, in a way, law, where now you can work directly with the attorney through a freelancer model, and now you can pay a whole lot less, and the attorney's making more because now they're working directly with you, and you get the same quality, same type of legal care. So I like that. In fintech, you know, I love fintech because fintech allows people to understand, manage, and grow their money so much easier. Like, I mean, we could just talk in a little bit of an extreme. 100 years ago, if you wanted to invest your money in the stock market, if you weren't very wealthy, it was nearly impossible, because you had to know a wealth advisor or a broker, and then you'd have to trust their opinions about the stock and then put their money in. It was very difficult and very risky. Nowadays, there are so many apps out there that will let you start investing into the capital markets with as little as $1. And that just makes it so much more accessible. Now, the problem is, a lot of these apps give you access without the education, which isn't their fault. They're giving you access, but many times tools without education can become it's a double-edged sword. One example of that is credit cards. Credit cards are a great tool. I only use a credit card because I get a ton of perks and cash back. But if you don't have the education of how to use a tool, that credit card will skin you alive financially. And this is where now, okay, you have some great tools, like Robinhood has made stock market investing a lot more accessible, but if you don't know how to invest your money and you just start throwing your money into a whole bunch of meme stocks, trying to ride the wave, hoping you're going to get rich on margin, and then you lose all your money and more, well, now that tool has just skinned you alive. And so this is where now the education becomes incredibly important, and the fintech industry isn't so worried about the education. They're worried about just giving you access, which is important, but that access without education is really, it doesn't serve the whole value. And that's where those two industries meet, is now where you can really see an impact and value. I invest in fintech, but I'm working on more on the education side.
Yeah. That financial education, I'd love for you to share with everyone watching, because everyone's at this point, whether or not there's somebody who has no money at all, even someone who's sitting on millions going, I don't want to lose my millions. This psychology, mindset of financial education, like the gambler mindset, on the one hand, it could be someone who goes, okay, I'm in so deep, I might as well just like double or nothing, right? Which is what we're seeing with many people who've lost all this money in crypto recently and have never experienced that kind of loss before. And so they're now just frozen, and they know they need to do something, they don't know what, right? And then secondly, the opposite, like I just got a bunch of chips, right? I got nothing to lose, right? I'm just gonna go to betting like crazy, which is what happens when you get student debt. And it's like suddenly it's like, hey, I've got like all this cash, so I can actually go out there and actually do something with it, forgetting you have to actually pay it back later. In either case of having like too little or too much, you end up doing crazy stuff, right? What would you say to get people back to a rational mindset in crazy times are the top couple of things they should be doing right now?
The first thing is, especially when we're talking about investing your money into these types of assets, if you're a beginner, do not use debt. Stay away from debt, because debt amplifies your mistakes. And debt is what turns a small little correction into a major crash. Because now, I'll give you an example of what's happening right now. If home prices correct by 10 to 15%, you might not think it's that big of a deal. But right now, the average down payment on a home in the United States is 6%. So what does that mean? If you get a home with 6% down and home prices fall by 15%, well, now that correction can turn into a crash, because now you have a whole section of the country that's underwater on their homes. And when you're underwater on your home and you struggle to make a payment, well, now you're much less incentivized to keep making the payments. Instead of sending in a check, you might just send in the keys, because you feel like, well, I'm underwater, what's the point? And that's what can create a influx of supply, because now more people start selling, or you see forced sales, because now lenders or banks, or in the stock market, you have margin calls. All these things can enforce more sales, causing an increase in supply, causing asset prices to go down more. So the first thing is to avoid the debt. And then second is, when you see that type of distress, that fear, that's when you want to be, the old saying is, be fearful when others are greedy, be greedy when others are fearful. When asset prices are falling, that's when you want to start thinking like the minority, not like the majority, and look for the good assets and start buying. And if you don't want to spend the time, effort, and research to actually research an asset, like if we're talking about the stock market, if you don't want to read the earnings calls, if you don't want to study the company, read the financials, then don't invest in the company. Invest in something like an ETF or an index fund. That way you can limit your risk, because if you're just throwing your money into a company because you think it's a good investment, now you're gambling. Investing is different than gambling, although a lot of people want to argue that it's not. It really is different than gambling if you understand how it works. And if you are not willing to put in the work as an investor, that's fine. It's not for everybody. Then limit your risk by using something like an ETF or an index fund, both low cost. That way you can buy these things at a discounted price without taking on all the risk of investing your money, throwing all your money into one company.
Yeah, and talking about de-risking, obviously one of the biggest ways to de-risk is by who you know versus what you know, right? Getting in the right community, being around other people that are savvy and are able to share information as well. Obviously you have market briefs or briefs, which we'll share with everyone so they can all see what you're doing and how you're doing it. We obviously have our Genius Group where we have groups in all different cities and countries. What would you say in terms of, number one, people investing in themselves, including in the communities they go to? Number two, any particular communities outside of yours and mine that you would recommend to people that you think are great, that they should be thinking about? And number three, without overloading you, international, to what extent should people be thinking beyond their borders?
So for number one, regarding investing in yourself, this is one of the most important things that you can do. And it becomes very, especially when you're starting off, it can become tricky because you're saying, I don't want to spend maybe $20 on a book, or maybe I don't want to spend $1,000 or $5,000 on this coaching. But instead of focusing on the price, this is where you want to really focus in on the value. Because if someone said it's going to cost you $5,000 to learn this thing, but it's going to make you $50,000 worth of money, well, now it's like a no-brainer, right? Pay $5,000 to earn 50, but you don't know if it's going to earn you 50 or not. So this is where you want to make sure you're learning from good sources, but work your way up. Before you spend $5,000 on anything, start by watching YouTube videos for free. Listen to podcasts, then advance by reading books. Then as you start reading books, start doing. Then maybe buy a class on something. And this can be from real estate investing to stock market investing to financial planning to whatever it might be. And then if you want to continue learning while doing, then you can invest even more into something like coaching and consulting. But you have to be willing to invest in yourself. The second thing, when it comes to looking for groups, I don't know of any major groups like that off the top of my head. Obviously, you have a great community that has a ton of resources for the people listening to this, watching this. So check that out, marketbriefs.com, briefs.co. But then beyond that, for me, what has worked for me is reading books because, I didn't grow up with any sort of mentors like that. I didn't have real estate investors in my family or investors like that. I didn't know what dividends were. So for me, the way that I learned was by reading a lot of books, but more particularly biographies. Look at some of the people that have inspired you and look at their biographies, and you're going to learn so much. And it might not even be about things that you think you're going to learn about. Like when I read Ray Dalio's books, I learned a lot about mental health because he had a son that was facing mental health issues, and he talked about that. And you learn so many different things from these biographies, and it makes you a much more well-rounded person. Like you talk about, decentralizing education. If you want to get an MBA level education on how to run a business, go out and read 20 of the top business books on Amazon that have the top ratings, and I promise you, you are going to get so much value out of those 20 books at a fraction of the price that the MBA will cost you, and then go out and do something based off of what you learn. And the third question of looking beyond your borders, and this is becoming more and more attractive and more interesting nowadays, and there's a number of ways that you can play this. The safest way for you to look outside of your borders would be to look at like something like an ETF that gives you exposure to emerging markets. Emerging markets are companies and countries that are outside of the United States if you're in the USA, and now you get exposure to those. If you have more capital, well, then you can look at actually going into other countries. Like I know we didn't go too deep into the UK, but the UK is facing a pretty severe property and housing crisis in the coming years because unlike the United States, the United Kingdom doesn't really offer 30-year fixed rate mortgages. Many of them are variable interest rates, or they readjust after 2 years or 5 years, and some of them 10 years. And in 2022 to 2023 and 2024, you're going to see millions of households see their interest rates readjust at an interest rate many multiples higher than what they originally got. And couple that with the energy crisis, couple that with the inflation, couple that with the economic slowdown, and you have the workings of a pretty bad property crisis. But now, what does that mean? Well, if you're a real estate investor, that could create real estate opportunities for you. But if you want to be investing in an outside country, which I have never done, so I can't really say if it's good or not, but you would need more capital to do that, to make it worthwhile, to go there, learn the laws, and start all over there, but then also protect your assets somewhere else. It gives you a little bit of a protection because it's operating on a different currency, but that's where also, like I have a friend of mine who is from the United States, but is developing property in Guatemala. Part of it is a way to protect currency and to get out of the United States, and because it's a place where a lot of people who are digital nomads are moving to, because the cost of living in the United States is so high, so people are moving to a cheaper cost of living. So that was his justification to start buying land and actually developing land there. I've just never done it before myself, but there is a good argument to be made that there is value in that.
That's brilliant. Yeah, great advice, and I love the way you're thinking. If there was one thing in addition that you would add for everybody, from the point of view of how to keep your radar on, right? I love the way that every day you have up-to-date information, which clearly comes from watching a whole bunch of different sources. And most people, they still just watch the mainstream media, right? Which is the worst place to go for sources. So how do you go about making sure you're keeping informed on what really is going on there? And what would you recommend for everyone, whatever their specific focus is in the way that they're going to be building their wealth?
So for me, it's kind of funny. I started because when I started, the pandemic hit in 2020, and there was so much news happening, and that's when I switched to making daily YouTube videos because there was so much craziness happening. So I have a team here, originally at the Minority Mindset, and I said, look, can you guys give me a daily breakdown of what's happening in all the different sectors of the economy? That way I can make better and more educated videos, because I'm already doing my research. But if I have multiple people out there trying to figure everything out and doing the research and analysis for me, that helps me out. And that was when I was like, this is a pretty good thing. How about we market this as a newsletter for free? And we did that just kind of as a test, and many people started signing up and enjoyed it. And that's when we branded it as Market Briefs. And that became Market Briefs. And then that grew to a pretty large newsletter relatively quickly. We haven't spent a penny in advertising yet. And now that has become briefs.co, which will also become include a business briefs newsletter. So that's how I started getting my information. But I watch a ton of YouTube. I watch YouTube videos that are not just in America. I actually watch videos, interviews, and people in different countries, sometimes in different languages, to see what's happening in different parts of the world. Like my family's from a state in India called Punjab, and so I watch some of the news over there, just to kind of get an idea of what people feel about the economy in different parts of the world. And I read a lot of newsletters, not news, but newsletters. I pay a lot of money for a lot of these subscriptions to just get an idea of what's happening, so it keeps me up to date.
That's super. I love that, and that kind of brings up a thought that I think is so important, which is when you have a responsibility to pass on some information to somebody. Like the fact that you got the brief, so it's like, right, well then I need stuff for that. So hey, let's build a focus, let's build a team, or even doing a YouTube video, or even us being here today. It's like, hey, what information we want to pass on to others forces us to then have to be learners ourselves as well. And I definitely think that is a great thing for everyone to be taking away from this as well. Even if they don't have a YouTube channel, they can pass something on to their kids. They can pass something on to their husband or wife. They can pass on to a friend and say, hey, this is a piece of information they're going to find valuable. And what can I actually share with them tomorrow? Well, I'm going to go out and find something today that I'm passionate about that can actually then be passed on too. So with that, I just want to say a huge thank you for actually not just being here, but just for everything you're doing, because you are actually influencing so many people out there. Really, really appreciate it. And I know everyone's got a lot from this interview as well. All the best, and look forward to having you back on our channel again.
Thank you so much. This was a great interview. Great questions, and I would love to help out in any way that I can. Keep up the great work.
Thanks very much. See you later.
Bye.
All right, so that was the amazing conversation with Jaspreet, and I just want to make a quick poll and just type this into chat. If you are a fan of Jaspreet, just type in fan, and if it was the first time you've heard of him, type in new, because for me, he was new. I had heard of him. I had never heard anything from him. I can't wait to sign up to the newsletter. Check out his newsletter, briefs.co. I know a lot of people are asking about that. But with that, Roger, I want to pass it on to you because I know you have some exciting things to share, and we'll be heading out to a break shortly after.
Yeah, I just wanted to say, I think Jaspreet is awesome. And I've spoke with both him, with Brian, about the fact that we are going to be launching a number of high school and degree programs on financial literacy. Right? And they were like, yep, like, come in, right? Like, this is what's so great is that we have so many passionate educators already who've got millions of followers that everyone already wants to learn from. but you can't actually, get the certifications you need by working with them. And so I think this is what's going to be so exciting about this next couple of years, as we build all this up. Because who wouldn't want your kids to actually be like learning from people who are super engaging and also who are leading learners, right? We're all going to be working with those leading learners. One thing I wanted to share is that there is at the end of this whole session today, like next steps for everyone who's beginners, because I've seen some people posting, hey, look, I'm totally beginning on my journey. But there's one thing also that we were talking about in that session, which was all about this whole point about learning with others, right? Like, how do you actually do that effectively? And more importantly, how do you do it at the right level? So I was saying, right, in one of the sessions about these different levels, I was saying with one with Brian, I was like we do have different levels. It's really important for everyone to be thinking about the levels as well. And this is not new, right? Like as always, I'm synthesizing what other people already are talking about. This here at the PayPal Mafia, which are the guys that really understand how to build billion-dollar businesses, right? And I've been learning from a lot of these guys. Like Reid Hoffman just basically ran his Masters of Scale program this week, right? So I've been part of that, getting the best tips on how to really grow. So some people on this call right now are at the $1 million mark or beyond, right? $10 million mark in terms of your portfolio or your business. Some are at the $100,000 mark, right? Some are at the $10,000 mark. So what's really super important, and what I'm going to do, I know at the break we're going to be talking about this, is that there's an invitation for those of you who are at the moment beyond the $100,000 mark, beyond the $1 million mark, to just get together in groups with others to really understand what your strategy is for $1 million portfolio is totally different from 10 million, totally different from 100 million, right? And sometimes your winning formula becomes your losing formula. So we have a number of different tools within our teaching, which includes something called the impact meter, which is basically a 10 times growth scale. So just to give you an idea of what it looks like. If you are just getting started, you might be at level 1, which is kind of like having one customer or having your first $1,000. Level 2, 10 customers or 10,000. Then it goes up to 100,000. So you're adding a 0 every time. By the time you're getting to level 4, you're getting to $1 million line, and then it goes up to 10, 100, billion, right? So basically, within 7 steps, you're at $1 billion. And basically, what's really super important about this is understanding that if you're at like yellow level, right, you're basically trying to build your customer base, and someone else is talking about teams. It may be too early for you to be doing that, right? Or someone's talking about their $10 million portfolio, right? Like what you heard Brian say when he goes, hey, we're buying a shopping center. That might be interesting, but you may not be able to go and do a $50 million deal right now. So how do you get around other people who are talking in the same language and then get the right things that are right for you, right? So I'm not going to go through the detail now, but the fact that every single one of these levels has got what do you do, what you don't do, because most of us are actually doing the wrong thing. How do you actually set up a highway for your investments and for your business? And depending on what is your natural profile, because Richard Branson makes his money very, very different, from Warren Buffett or from Mark Zuckerberg. How do you do things in a natural way in terms of your steps as well? So this whole aspect here, without going into detail, because you don't need the theory, you need the actions. What we're running on a weekly basis, and this is me personally running some of these together with our team, is something called a Founders Roundtable. And a Founders Roundtable is free, right? So it doesn't cost money to be part of it, but it gives you an opportunity, and it gives us an opportunity to share with you real truths, home truths about what you can do in your current business right now, and doing it at the right level for you, or what you can do within your portfolio. Most people are they know that they're going to have to be a business owner as well as an investor. So you might basically be just in a job right now and thinking, how do I invest $10,000 or $100,000 of my money? But you might be at a point where you're like, no, actually, I got more at stake, right? I've got $1 million business or beyond. So how does this work? Really super simple. You can see there's a QR code here. We right now have 16 spots because we only let 4 people into some of our Founders Roundtables. When I'm doing my ones, I will have maybe 10 maximum. But basically, we'll actually have the Founders Roundtable where you're being put into one which is the same size business or same size portfolio as others. And then we basically get to have a conversation with you, find out where you're at, how you can improve, and you hear from the others as well. And this is virtual, right? You don't have to physically show up somewhere, but it's a virtual thing where when you do come here, you get to meet others, you get to see what their challenges are, what they're looking to achieve. The learning is immense on this. We do this effectively as a free service because we want to make sure that those that are really wanting to take next steps on your own path have a way to really see the value that you can be getting by being part of these kind of communities. And we also then, off the back of it, if there is things that Genius Group is doing that might be valuable, whether it's the mentoring, whether it's, coming out to our Bali retreat. You hear about those things, right? But we wouldn't even suggest things unless we actually know it's the right next step. So how does this work? Very simple. You just scan this. You're going to be taken, once you do this, to a booking calendar where you find a time that works for you. You book in a 30-minute, what we call discovery call. We find out kind of like, what size business you have, where you're at, so that we can then put you in the right Founders Roundtable. I'm going to be conducting a number of these. Michelle Clark and Donna, our head coach, will also be conducting a couple. We'd love if you actually are getting a lot of value from this to take the next step. And then, of course, as we start working with people like Just Breed, with Brian, with everyone else you've heard about, we'll keep you updated on all of that as well. So I just wanted to share that, and I think we're going to leave the QR code during the break. So if anyone kind of like went off and got a cup of coffee, they can come back. They can still take this as well. Is that all make sense to you on your side, Jason?
Yep, makes sense. I think it makes sense for everyone else. One quick thing I would clarify, Roger, is if you're just a beginner, should I still be using one of the slots and booking this?
I would say that the minimum size in terms of either investment portfolio or in terms of business size is $100,000 or more, right? Now, that doesn't mean we don't have a lot of good things we can do for those who are at the beginner stage, but it's too early to get into, because if you come in a group and we're basically getting to share the size of your business, your biggest challenge, what you need to be doing right now, you're not going to be having fun being in a group with like $1 million businesses when you're like, oh, I'm just getting started, right? So this is not the right level yet if you are as a beginner. But by the end of this session, we'll tell you about an upcoming workshop, which is, again, is free. Like, we want to do as much of everything we're doing as free as possible, because we believe that like everyone has a right to this education. But basically that is something for anyone on here who's just getting started, which will be a lot more effective to get you going with your first investments.
Fantastic. And by the way, just sending a lot of love to the Genius U group. One of the reasons I like getting involved with your group, Roger, is because I see how much you're giving for free for so many people and so many levels. And for the people here, I mean, we've gotten a chance to spend 8 hours, or at least 6 hours so far, for a total of 8, and doing this, learning from these amazing speakers. And it's so much fun and it's so cool. And so thank you so much, Roger. Thank you to your group for doing this. And with that, I'm going to lead people into a break. And so for everybody here, we will be back. Roger's going to have some more amazing content. We're going to be talking about Humanity 5.0. And so we'll give you 15 minutes for those of you who are online. For those in Singapore, I know you're going to have an additional little session with Roger. For those online, in 15 minutes. So looking at the time now, for me, it's 5:55. So at 6:05, I'll be back online answering a few of your questions. I know a ton of your questions have come in, so I'll make sure to answer as many. Oh, go ahead, Roger.
You said 15 minutes, right? So that's 10 past.
So for us online, we're doing 15. For everyone else, I just want to know, we're getting back started with the content at 6:15. So 6:15, we get started for the next session. But for those of us online, we're going to have a 10 minutes of Q&A as well. And so I'll let you organize your Singapore group. For us online, in 15 minutes from now, I'll be here just answering questions. If you want to come back instead in 20 minutes, then 6:15 is when the content gets started again. Is this making sense?
Wait, no, it's not making sense. If you want to give people 15 minutes off, they're going to be back at 10 past, not at 5 past, right? Because it's 5:02.
My math is so stretched.
Jason, I'm not having you as my financial advisor.
That's why I come on these sessions to learn the numbers, Roger.
$5 million, I got $5 million. Okay, $2 million. $2 million, that's what I got.
Well, it could work in a positive way. So I'm doing my math again. 10 minutes past. So we only actually went a bit over. So here's what we're going to do. 15 past the hour, we'll be back. And the Q&A, I think we're going to be skipping altogether. Maybe a couple minutes. I'll come early to answer them.
Jason, can I suggest, let's keep with the 15 minutes. I think people need 15 minutes off, right? It's 5:02 now, or just a little bit. So let's come back at 10 past. You can do a Q&A at 10 past, right? I'll do a Q&A here in the room with everyone at 10 past as well. And then we basically can get going at 20 past. How about that?
Thank you.
Awesome.
My math was rough, okay? So it seems more like it's 10 p.m. here. So let's go to the break. We'll be back in 15. Take care, everyone.
Wow, how was that session? Everyone enjoy?